Hello everybody, welcome back. Let's have a look at Bitcoin and Ethereum. I know it's boring, but it kind of dictates the rest of the market. So we're going to just look at those two now and just have a brief overview, really, because it's very much the same as it was yesterday. So yesterday was a nice move, and for Bitcoin particularly, it's holding up on the 4-hourly. So we're going to view these charts mainly on the daily and the 4-hourly. We've got some conflicting things going on with especially with Ethereum, but for Bitcoin, it's looking actually okay. Now this red cloud here signifies, I suppose, resistance to an extent. Downwards pressure is probably a better way to look at it. Downwards pressure on the 4-hourly. But what we do have is we've got a positive cross here, conversion baseline cross, and we're above the centre of the Bollinger Band. And for I suppose the last 12 hours, 16 hours, we've been held above the green 50 exponential, which is an important thing to look at because the trend has now changed to slightly up in the favours of the bulls, because we're above the centre of the Bollinger Band, which is good. In fact, we're above all major moving averages on the 4-hourly. Okay, the only thing that's looking, I suppose, negative is this big fat cloud here. So on the 4-hourly, it looks okay, and it's holding up on that level of support. If we were to break down below that 50 exponential, which is around about 48,300, this is the same deal as yesterday. Then we might end up, I suppose, having another pullback. That would be, it's not massively significant, but it's important when we're looking at it here on the daily chart, because on the daily chart what we see is we are at full-on resistance at the centre of this Bollinger Band. Obviously breaking above here should have continuation thereafter, and moving up towards new all-time highs. And that sounds crazy and ridiculous, but that's kind of how it is. And actually this is where we are. We've been sandwiched between the 10 exponential, which has now been reclaimed as of yesterday, and held below the centre of the Bollinger Band, which is obviously it's now basically it's a standoff. It's the last stand between the bulls and the bears. Who's going to win? We just don't know at the moment. It's too early to tell. But all we can say is that there's a very small trading range, so in that respect you could, if you wanted to, hedge your bets one way or another. If you come up to this resistance, then I'm not saying do this, I'm not a financial advisor, but bears could try and short this area just as bulls could try and long this area, and it wouldn't take a great deal of time to recognise if you're on the wrong side of the trade, and you can get stopped out and flip your position. Not that I imagine perma bears anyway, like to flip positions very often. So it's the battle is taking place, and it's looking reasonably good. Let's have a look at some of these oscillators. So that wasn't particularly oversold, but it was a relatively low point for the RSI. Money flow index is still kind of trickling down to an extent where we've still got more or less lower highs, but it's not the volume isn't pouring into this at the moment. So I'll give the nod to the bears, and the histogram is ticking up on the MACD. So again, not very strong signals either way, which doesn't really give particular use for any kind of edge. I would basically be focusing more on the 4-hourly chart at the moment than I would do anything else, because breaking down below these moving averages, which are supports at the moment, these are the ones that are going to hold the most relevance to it, because if we're changing a trend, the trend has been down for a little while, now we're hopefully changing the trend. If the trend has changed, it needs to have a continuation of that trend, which is basically what we're looking for now, is for these moving averages to start crossing over. So this crossing over here, this 10 crossing the 50 basically, and so on and so on and so on. So I think it actually looks quite good on the 4-hourly, but we can't deny that on the daily, which is the strongest level of resistance, we are more or less at resistance at the top of here. It also corresponds to the top of the Bollinger Band on the 4-hourly, and this Ichimoku cloud, which is big and red and descending. So again, I particularly don't have any real preference. I would be ever so slightly in favour of the bulls, because we are in a bull market basically, so that in its own right should give I suppose a preference to more upside, generally speaking, but it's difficult really to say what's going to happen immediately. It's a watch and wait situation, and if and when we break above that Bollinger Band here, we will essentially at that point be above all major moving averages, even though they're not diverged from each other and they're not in the perfect places. They're in a decent enough place and position at that point for me to say that there's probably going to have continuation up to a new all-time high, and maybe a quite significant one. Because in the end of the day, when we get these big pullbacks, a lot of people get scared and sell off. Really, there's a lot of funding reset. There's It's like a giant liquidity grab. People have been long for a long period of time. They take profits. They wait for another opportunity to get back in, and they get back in at a lower level and do it all over again. And basically that's generally what we see for these large big pullbacks like this. They're shakeouts, liquidity grabs, and basically an opportunity to ride the train all over again. You go back to square one. Like Monopoly. Skip to go. And collect $200. So you can't really complain with the way that these things work. In fact, if you're able to use them appropriately, they can actually be really good. So now let's turn our attention to Ethereum. So Ethereum's got mixed signals now, unfortunately. So Ethereum's very much the same in its chart formation, but it's more bearish. We do have the conversion baseline cross underneath the cloud, so it's not really anything to get too excited with. We've got a 4-hourly death cross, which normally has a continuation, you see, and the death cross took place at that lower wick. So if we did break down, for instance, if Bitcoin did decide to break down, it would end up being more significant for Ethereum. Definitely, it would end up being more significant for Ethereum. Usually from the point of a death cross, we'd expect between 15 to 35%, which actually would take us more or less down to this level of support down here, this little target area. I'm not saying that that's going to happen, but this is why I'm not really in favour of the bulls or the bears at the moment. We're at a pinnacle moment right now where there's not a great deal of direction either way in this little zone where the battle's taking place. And until the battle has been won by either side, the larger move is on hold. We don't know if it's going to be a large move to the up or to the down, and especially with Ethereum. We do have a signal here, but it's not. People often trade golden crosses as an actual signal. Normally, what they would suggest is a continuation of a trend, but we're not having a massive amount of divergence. It could just be a failed signal. You get these all the time. You don't get them very often, but you do get them all the time, especially on the lower volume assets. But with Ethereum, when's the last time did we have anything like this? Here's an example. A big drop down, a death cross. Not really any continuation. We had another attempt for a double bottom, and so it didn't really have a great deal of continuation. So you can see that playing a death cross on its own isn't the way to be doing anything. Historically, these things do happen, and I'd say it's not a signal, and it could just be void, really. We'll just have to wait and see how the whole thing plays out. So unfortunately, I can't really give you any kind of insight. Not that you should be trading on anything that I would say anyway, but I have to be open and honest and say that it more or less is 50-50. But because we're in a bull market, I am still in favour of the bulls. But it can't be ignored that there could still easily be another pullback. Now, if we look at Ethereum here on the daily, so we've got the actual trend has ended. This bullish trend that's been going on for such a long time has ended here officially, but that's not such a big deal. What we would like to see is for this to, I suppose, even if it to move back up again, what we would get is we would get a new cross. A new cross on the Ethereum chart here would be pretty bullish because it would be above the cloud, it would be a clear signal, and provided this Chiku span is above the price action when that cross takes place, then it would be an epic opportunity for a long-term position, whether that's a spot entry or a low leverage long for a prolonged period of time. We saw something like that on Bitcoin on the daily, so our trend officially came to an end here, and then we danced around for a period of what looks like maybe a week or so, 2 weeks, just under 2 weeks, and then we got ourselves a new cross here, which suggests that from here the continuation of a new trend is going to be up, and it certainly was, and technically it still is. This hasn't touched price action. We've not got an opposing cross, so at the moment this trend is still to the up according to that indicator, and this trend has officially ended, and we'll be waiting for a new trend to officially begin before we get too excited and go crazy on Ethereum. Now, that's just using the Ichimoku cloud. It's not using any of the other aspects of trading, and when it comes to using oscillators and moving averages, Ethereum is still not looking too bad. But we're in the bearish zone here, just as we're still in the bearish zone here. But Ethereum looks worse because the moving averages are facing down, generally speaking, and Bitcoin's looking much better. Even though we're in the bearish portion of the Bollinger Band, moving averages are facing up, which basically means supports are facing up, resistances are facing up. So even if we're playing a game of support and resistance for probably the next week or so, they will all be getting higher. The supports will be getting higher, the resistances will be getting higher, so that should allow for higher highs and higher lows, which is kind of the opposite of the way that this chart is looking on Ethereum. So I'm not massively bullish, nor am I massively bearish on either of these assets. We are at what could be considered a turning point, in favour of the bulls, and the way to really focus on this one is really all about, for me, it's about this moving average here and this one here. So breaking down below, we'll call it 48,300 on the 4 hourly, with a closure below that level on the 4 hourly chart. Isn't a good sign, but then we've still got around roughly about 46,700 on the 4 hourly, and if that breaks down, then yeah, we probably would have another stab lower. I mean, at the end of the day here, what we do have still is we've got on the 4 hourly, we've got lower highs and lower lows forming, but this one could end up being this could be the turning point. Again, it's not very interesting, I suppose, for me to ramble on about, oh, it could be up, it could be down, but sometimes that no one's got a crystal ball. We all have limited tools to use, and all they do is give you an edge one way or another. And if there is no edge, then you have to just sit back and admit that you've not got an edge, and you have to wait for that edge to emerge, and that's what I would be most likely to do. Just sit back and wait for a more clear example of continuation up or breakdown. Anyway, I'll leave it with you there, but thank you for watching. I hope you have a nice day. Take it easy.